All right, so you should be able to hear me now, guys. Hopefully everyone should be online and ready to rock and roll. I think we're starting a little bit late, but everyone can hear me? Perfect. All right, what I'm gonna do is I'm gonna show you. All right, my screen's recording, but you should have like a little Q&A box somewhere on your screen, right? And what that'll allow you to do is essentially type in your questions and answers, which I'll just gonna wait to the end to answer them. So please feel free to type them along, and I'm always happy to go back. And if I'm going too quickly, let me know. If I'm going too slowly, whatever it is. Hopefully, you're having a wonderful night in lockdown. If you're from, well, I guess, geez, I guess almost every other part of Australia, you'd be stuck inside like I am. But the good thing is, I've got my little puppy next to me. She's not a puppy anymore. She's like 7 years old, but she is still a terrorist. To be honest with you, and I've got my partner as well. So if you do hear any background noise, just understand, obviously, we're all working from home and I'm doing this from my living room, literally. All right, so tonight, we're going to be talking about trading with a trading system or a set of rules or a set of guidelines or, what have you. Before we get stuck into it, you should be able to see a number there. If you've got any issues, feel free to call the office, right? Hopefully someone picks up and they'll be able to help you with your technical issues, right? I suggest you play like a YouTube video to make sure your sound's working and all that type of stuff first before calling in, right? Because let's be honest, it's probably an issue on your end rather than ours most of the time. And you should be able to see like a little Q&A box there, as I said earlier, in order to type in your questions and comments. One thing I will say, and this is very important, is this is a two-part webcast. The second part is going to be applying what we learned tonight, or the concepts that I'm bringing to you tonight, and applying it to the live market. So using it in a very practical way. So what you want to do is type, stock codes, anything that you want us to look at, and apply what we're covering tonight to those actual things. So you might be like, look, I know CSL reported. Can we have a look at that? And we'll go have a look at that next week. Now, admittedly, obviously, there's going to be a time dilation there. So you might want to look at stocks from a bit of a broader perspective. But if there's any kind of stocks that you want us to look at, give you a fundamental / technical trading opinion on, make sure you type them in and we'll get to them next week, okay? Now, tonight's webcast should go for about an hour. I'm going to be honest with you, I have been known to go over time. I can be a little bit enthusiastic. I kind of ramble on a little bit. I can go down rabbit holes, and that all of that can kind of push back the time. I'm going to try to be very good tonight. I'm going to be a good boy, and I'm going to try and keep on track and keep it to 1 hour. All right, and that includes question and answer time as well. So you might be wondering who we are. I know there's a lot of people online right now who've listened to a bunch of our webcasts before, like your regular subscribers, and I really appreciate you jumping on again to listen to what we have to say. That's fantastic. But for those of you who are joining us for the first time tonight, if you're new to this whole thing, I'm sure you've listened to other webcasts, but we are Traders Circle and Emerald Financial. That's the businesses, right? Now, the same people work for the same businesses, right? But we like to keep them separate because they approach the market from two different perspectives. Traders Circle is about trading, right? And when I use that word, I'm talking about more short to medium term. So the majority of people who are under the Traders Circle banner, what they're looking to do is to generate an income stream. So they're looking to buy and sell fairly regularly, or enter trades, I should say, open and close trades fairly regularly in order to try and generate an income stream. And so what we like to do under the Traders Circle banner is we like to give advice to our clients on a fairly regular basis, help stay on top of their positions, right? Give them trading ideas and recommendations, shorter term trade recommendations. Help them price up strategies, manage risk, pick direction, all those types of things, give them like a lot of full service, right? Our business is really focused around supporting traders, right? So we're traders that support other traders. Emerald Financial is a bit of a younger company, and that's more focused around medium to longer term investment. I mean, it's all to do with the stock market. It's all to do with speculation. But the different timeframes, and different timeframes actually require different skills. And that'll actually come to light a little bit during the webcast tonight. But ultimately, when we're talking about medium to longer term investment, what we're really looking at is fundamental analysis. We're looking at companies, the health of them, buying them for longer term portfolios. And then if you want to, using some derivatives in conjunction with your portfolio to try and increase the yield. And I'll go a little bit into that tonight, all right? But ultimately, that's the companies. Trade Circle's been around since 2005, and Emerald Financial's been around for the past few years because we realized that there was a lot of clients who, albeit are interested in trading, they also want to be able to build their nest egg, look for capital gains, and look after their financial future as well. So Emerald Financials is part of that. All right, very long-winded answer. Now, my name is Caro Cornips. I've been with the business for 8 years. I should be familiar to a lot of you. In fact, I probably work with a lot of you. My job, front and foremost, is to be an advisor, right? So I've got clients who will speak to me on a fairly regular basis, some every day, some several times a week, depending on what their needs are. And I'll give them trade ideas. I'll help them price up strategies. I'll help them manage their risk. I'll execute orders on their behalf as well. So, they might be out and about and they might say, oh, what's this trade doing? And I might say X, and they might want me to close it for them. And that's something that I can do, right? So I'm a full service advisor, essentially. The other part of my job is to educate or to train, right? That's why, one of my titles is head trainer. Titles is not something that I don't think we've put a great deal of effort into, but I don't think they're that important, let's be honest. So I help train people. I help educate them. I run these types of webcasts. I create education content to help people understand exactly what they're doing. Because ultimately, my belief and Trader Circle belief is that the best trader for you is you, right? And I said, again, I use the word trading specifically. I don't use the word investing. You can pay a funds manager. You can buy ETFs. There's, from an investment perspective, you could have a financial planner, and I'm not going to try and discredit any of those approaches, right? Because I think it's horses for courses, and I think different investment approaches work for different types of people, right? And that might mean having a funds manager take action on your behalf because they're just better at it than you. Trading, on the other hand, I don't think works like that. I think, the reason why I believe that is because it comes from, I guess, anecdotal experience or primary experience. Over the past 8 years, I've noticed that the best traders are the ones who take control themselves. Now, we'll help them and we'll support them, right? We'll give them advice. But ultimately, it's their risk tolerance that informs their decision-making and their psychology that informs their decision-making. And so it's only really the experienced active traders that trade for themselves are the ones that actually make money and do well. Right? So understanding that, what I want to do as part of my job, aside from give you short-term advice, is actually educate you and equip you and support you so that you can actually do this yourself, right? And or in another way of putting it is to do it together, right? Rather than me kind of just telling you what to do. Does that make sense? So that's a pretty goofy picture of me as well. If you've been listening to my webcast, you'll know that I do. It's many years old, in fact. I like to think I've aged well, albeit COVID and lockdowns. I might have gone up the BMI scale a little bit. Let's be honest. I'm sure we all have. It's hard to kind of keep exercising, or I used to do specific types of exercise that I'm not allowed to do right now. But and I can't get a haircut either at the moment. So I'm not going to update my photo until we come out of lockdown and I'm able to do those things. So you're going to have to bear with it, right? But that is a very young me, a very slick me, maybe. And if you ever want to come to the office and meet me face to face, you're welcome to. We're in Melbourne. We're a small business. There's about 12 of us in the office, and we're all very friendly and open to face to face when it's allowed, when it's legal. All right. Now, before I get into the guts of it, because I think I've wasted about 10 minutes or giving a good intro, just understand that when it comes to Trader Circle and Animal Financial and this particular presentation, anything that we do is general advice. Okay, so general advice means that we're not taking into account your personal circumstances. And that ultimately means that if we do give you any advice, you have to decide for yourself as to whether it's appropriate to you, because it might not be, right? That's a decision that you need to make. The advice that I give in these presentations is the advice I would give anyone, essentially, right? Now, what we're going to do tonight is we're going to go through a little bit about what makes a good trader, but I feel like a lot of you already know. And if you don't, then there's other webcasts that I've run that you can go watch to learn that. There's a really, really, really good 3-part webcast that I ran, or that Tim and I ran. Tim's he's kind of like my boss in some ways. He's the head of the trading desk. Him and I both ran it 6 months ago, maybe. It's on our YouTube channel. Sorry. Go to our YouTube channel. You can find a whole bunch of recordings that are really, really useful. We only upload things that we think are actually useful to people. As much as I am a rambler, I'm only doing this because I think it will help. So make sure you go check that out. If you want to learn about core stuff, that's probably the best place to look. Tonight, I am going to go and skip over things, right? So what tonight is about is really drilling home, arguably one of the most important things that you can understand when beginning your journey as a trader. If you're already investing, you'll probably have a bit of an idea about this, but investing is by definition lower risk, right? By definition, it's lower risk. Because if you think about it from a trading perspective, shorter term trading, the idea there is to try and generate an income stream. You're trying to make more money with arguably less money and in less time. And what that can mean is that, what it must mean is that you can lose a similar kind of amount, right? Because risk must be a function of return. So if you want to make more money, you need to be in a position where you can lose more money as well. And that's the definition of risk. And so if trading is inherently more risky than investment, then it requires a far greater understanding of what's going on, right? And that's a kind of euphemized way of saying you need to know what you're doing, right? You need to get the proper education. You need to get the experience. You need to get your mind and your psychology under control, right? I mean, these are all very important factors that separate trading from investing, right? So tonight's session is about understanding rules, because when you're investing, it can be a little bit looser. It's like, oh yeah, my mate told me to buy, brain chip or whatever, right? And you can make a bit of money. You might get left holding a bag, right? You might go down, but then you just hold it for the next 6 to 12 months, and maybe it'll pay off, right? Trading, you can't really do that because you just won't survive. You just won't survive, or it just won't be trading. So a rules-based approach is very important, and you can swap out the word rules for guidelines if you want. I mean, it's just the language that we use. It's just, in my opinion, they're synonyms, right? Rules, guidelines, right? They can be loose, they can be tight as hell. Like you might need, you might need Saturn to be in retrograde, and you need to make sure that a black cat walks past you or something like that. You might have these hectic rules that only allow you to enter one trade every 6 months or something. Or you could be much more loosey-goosey with your trading rules as well. And I can't comment on what the best approach is, because obviously there's a million different ways to skin a cat. But I think what's fundamentally important, what I'm really trying to drive home nice and early in this webcast, is that you need to have both. Right? I mean, sorry, you need to have a set of trading rules for both approaches. Does that make sense? All right. So what we think, and this is something that's should be a familiar slide to you guys if you've ever attended any of my basic kind of webcasts that I run at night, is that if you want to be a good trader, there's 3 main areas that you need to master. First, you have picking direction, right? What do you reckon that means? Right, obviously the ability to speculate on the future direction of the stock. Then you need to be able to choose an appropriate strategy. Now, if you're just buying and selling shares, then your strategy is really limited. So you've got buy low, sell high, the fairly obvious one, maybe averaging down. There's a couple of other strategies that you could maybe employ as a share investor. There's a whole lot more if you trade derivatives like we do, and I'll get into that a bit later on. And then finally, obviously you need to be able to manage your risk. Now, the reason why you need to be able to manage your risk is obvious, but I'll say it anyway. You're obviously going to have losing trades. And so if you're going to have losing trades, then the idea is to be able to manage them effectively so that the losses don't outweigh the profits, if that makes sense. All right. Now, what should bring them all together, and this again is really what tonight's about, is a set of trading rules or guidelines, if you want to call it that. All right. Now, when you first, as a bit of a beginner, you might be that goofy looking dude there, right? You might be, or lady, I should say. Men aren't the only goofy ones. There's a lot of stuff going on, right? And I don't know if you guys notice it, but I feel it as well, right? Over the past while, it feels like there's just a lot going on. There feels like a lot of information. Some of it feels like misinformation. Some of it feels like propaganda. Some of it feels like manipulation. Without just sticking your head in the sand and going, and wiping your hands of it all, how do you make heads and tails of it, right? And I'm sure we all have our political alignments and, traits, etc., and opinions and whatnot, and that's all well and good. But at the end of the day, we're trying to make money from the market, and so we've got to try and put that stuff aside and go, all right, with all this information that's being delivered to me at my doorstep, because it's there, it's readily available, it's not hard to find either, right? There's not some secret to the market that I know that nobody else knows, right? There's not some kind of silver bullet. There's not some like insider trading that I'm like, that's like a little side hustle kind of thing. It doesn't exist, right? And newbies kind of looking for that. They want this kind of secret approach that just doesn't exist, right? All the information that's available to me is available to you. And seeking it out is really just not hard. I'm sure you guys are already kind of able to do it, right? It's just overwhelming at times. Is that fair enough to say? So how do you turn all that stuff with a capital S into a decision-making process, call it that, right? Where you push the buy button or push the sell button, and you don't just push it with some kind of meek, hesitation. You push it with confidence so that you know that, well, you feel that you're making a good decision, right? And not because Dave from, the local Rissol told you to do it, right? Well, what you try to do is you try to put it through a mechanism, and you try to have a rules-based approach. And it's easier said than done, obviously. It's easier said than done. I mean, trading is a lifetime pursuit. It's not a get rich quick. It's not a it's not, I mean, look, to be honest with you, it's not for everyone. That's certainly the case, and I think everyone online would probably respect that. And maybe you're feeling it out. Maybe you're seeing whether or not this is something that you could do. But trading is a life pursuit. It is a career/vocation hobby thing, right? That you consistently do for the rest of your life, that you want to get better at, right? So it's easier said than done, but ultimately what you're trying to do, what the goal here is, to be able to put all through that in like a meat grinder, right? And at the other end produces a delicious sausage. That's not something I thought I would say, but that's kind of a good metaphor for it. Trading rules are really important for, I would say, very obvious reasons, but let's go through them. One, obviously, they keep you disciplined. So, I don't know about you guys, but lockdown can, and weather and certain things can get you feeling a particular way, right? You might not be feeling too great, emotionally at the time that you're making decisions. And therefore you might not make the best decisions rationally. You might be perhaps thinking emotionally. And you might think that you are not that type of person, but I promise you that you are to some degree. Right? You could think you're the most rational person in the world that, is almost like borderline psychopath, robotic approach to everything that you do. And I would say that you're probably more like you're under, that's just not true. I can promise you it's not true. I'm trying to be nice about it, right? You're probably disillusioned, let's be honest. What's good about trading rules is that it helps you remove that kind of emotion. It helps keep you disciplined, helps keep you on track, so that when you are having a tough time, and there's times in the markets where I promise you'll have a tough time. I've just had one myself, for example, right? I've just, there's times where you cop it a little bit, and you might cop it several times in a row, mind you. And if you're a trader that trades for like 20 years, 30 years, 40 years, 50 years, I guarantee you at some point you're going to go through a market crash. I guarantee you at some point you're going to have a mad string of losses that completely humble you. My colleague Sam Green, who's a wiser man than, and actually a more intelligent man than me as well, he said, when you've had a string of successes is when you're most vulnerable. And I don't know if he made that up, but it's beautiful. I feel like I should get it tattooed in reverse, so that when I look in the mirror, it's on my chest every time I have a shower, right? It's a beautiful statement. I guess what I'm trying to say is that the emotions will come to play every day that you're trading. And so a set of trading rules is really, really going to help you keep on track. It's really going to help you stay robotic, because it's step 1, step 2, step 3, step 4, etc. Right? And because those rules are logical, right, and theoretically they're tested, and that's something that is important. You need to test and adjust. Then it'll help alleviate a lot of that emotion from that decision making. And again, if there's people online right now who are seasoned traders or even just seasoned investors, I'm sure that you'll agree when I say the age-old thing, which is that trading is ultimately largely psychological. 80% of it, maybe something like that. If I had to put a stupid number to it, maybe 80%, maybe more. I don't know, something like that. I'm sure the seasoned traders would agree with me. And if you're new, that won't resonate with you just yet. It won't, because I know it didn't with me, and it hasn't with a lot of people that I've taught. Right? It's something that you kind of say. It's a bit like a platitude, maybe even just a euphemism. Ha ha ha! Yeah, trading is a lot of it's in your mind. You kind of just take that on board and you go, yeah, cool. And it doesn't really resonate in your soul, but it will. It will. All right. So I'm going to kind of break down those 3 pillars, right? Picking direction, strategy, risk management. I'm going to really focus on picking direction, because I feel like that's one thing that I can bring across fairly easily without kind of divulging the entire, secret herbs and spices, if you know what I mean. It's also easier to explain than the rules that I have for strategy or risk management, because, well, particularly strategy, because I would have to teach you a whole bunch of stuff about derivatives, and I obviously don't have the time. So a lot of the presentation tonight is going to be focused a little bit on rules around picking direction, and obviously that's fantastic. And so, but I am going to assume a bit of knowledge here. Okay, so it's I'm not going to sit. You might be wondering, oh, what the hell are you talking about? There's a reason why I haven't explained it, and that's because I don't have time. But you can find that information out fairly easily online. You can find it on our YouTube channel. You can call me, and I can direct you to a whole bunch of resources that are free, mind you, that explains everything that I'm running through tonight in much greater detail. Okay. So just quickly, I've used the word fundamental analysis and I've used the word technical analysis, right? You should know what that means. Hopefully you understand exactly what that means, but there's 2 kind of diagrams there that give you a brief outline. Ultimately, technical analysis is about studying past price data. Fundamental analysis is about studying the health of the company through its reports, essentially, right? I mean, there's more to it than both those things, but I don't think anyone's going to argue with me on those definitions. When it comes to trading, we focus on technical analysis. Okay, right? And the reason is because it's far better for short-term trading. And if you don't agree with me, that's fine. I don't care, right? Ultimately, you have your way of picking direction. I have my way. don't fix what ain't broke kind of thing. I will say this though, regardless if you're a fundamental analyst or a technical analyst, or if you're both like we are, you need a set of trading rules. And that's really, again, what I'm trying to drive home. So let's keep focus here. Now, hopefully you had time to read that. Basically, technical analysis is about looking at past price data, and that is typically displayed as a chart, right? You could look at past price data in an Excel spreadsheet as a bunch of numbers, but unless you're like Rain Man or something, you're probably going to go cross-eyed. So us humans like visual things, right? We're visual creatures, right? I mean, most people I know are visual creatures, I should say, right? And so we like to represent that price data as graphs and technical indicators and lines and stuff, right? And ultimately, it's you look at this because the theory is that the history repeats itself, and beyond that, or to extend that, it's other people's beliefs that history repeats itself. Because if I believe history repeats itself and I take action based on that, then so will other people, right? And then that leads to like a self-fulfilling prophecy in some ways. Okay, and people build algorithms for it because of lots of robo trading. But that's, again, that's a long conversation. All right, so I brought up this chart deliberately in front of you because it's nice and messy. It's a current chart. This is today. I've made all this presentation today. I took, I stayed up, I've put plenty of effort into this presentation. It's all very current. And that's the chart of the XJO. And it looks like a dog's breakfast, understandably, because there's like 1,000 things going on there. Now, I'm just trying to exaggerate here and create a bit of, entertainment. I mean, obviously, this is the chart that I look at every day and the lines that I draw. I mean, I'd probably put more lines on here because it's just who I am. But there's a lot going on. And by the end of the presentation, hopefully you'll have a better understanding as to what's going on, right? And that's one goal that I have tonight. If you want to understand this stuff a lot more, you just need to go learn about technical analysis. We can help you with that, obviously. I can help you with that, obviously. You can jump on our YouTube channels, and that's got a bunch of videos on technical analysis as well. You could join our membership, and there's a whole bunch of videos, very intricate ones, that show you exactly how we pick direction. But that's something you have to think about. Now, as I said to you, it's about having a rules-based approach. So I'm going to give you what I would think is a very basic approach that you can use for yourself. It's just a basic approach. You should build on this, right? Build your house upon rock, not sand, kind of thing. Well, don't build your house upon your mate telling you what to buy, because that's sand and that's going to disintegrate. I promise you. Sometimes I love to quote scripture, right? I'm not a religious person, but I think I think it's awesome. So you build your house upon rock, and rock is a professional like myself, albeit at this time of night, drinking a glass of wine, telling you that you need to have a good, solid set of rules that you need to build upon, you need to test. Okay. If you come to education with us, we'll give you a set of rules that we've been using for the past 20 years, right? That we've developed over time, that we are very confident in, that we test and adjust, etc. But if you want to go it alone, I guess this is what you should be starting to look for. So when it comes to picking direction, this is what we're talking about right now. The first thing you want to do is you want to look at the market range and trend. I would think this is fairly obvious. So for example, and again, a lot of your stock traders, so I chose a bullish, well, there's not a lot of bearish stocks in our market at the moment, isn't that the truth? But ultimately, right, you want to define the trend. You want to try and draw your trend lines. You want to draw your range. By the way, this is ASX. Now, when I say ASX, I mean the company. I don't mean the stock market, right? So the ASX is a company as well as the market. Where I think we're one of the few countries in the world where that's the case. So our market is actually called the XJO, or the ASX 200. And it's an index that's made up of the top 200 stocks weighted by market capitalization, right? That's not this chart. This chart is the ASX, the actual marketplace, right? For some reason, they're allowed to be a publicly listed company on their own market that makes profits and stuff. And I'm not exactly sure why. And I've got a lot of gripes about this. They reported today, by the way. Anyway, that's a conversation for another time. Otherwise, I'm gonna start ranting. But this is the chart of the ASX, and it's not too long ago, but mind you, it's fairly recent, I would say. But it was a nice little picture perfect recent example of kind of what I'm teaching at the moment. So firstly, you want to draw your uptrends and define your market range, right? And you can see I've written a couple of things there. I've got uptrend / support and resistance. Now, the uptrend line is essentially a support level because it supports the stock from falling further. So every time the stock comes down, it gets back to that level and then it bounces high. It comes down, it comes back to that level and bounces higher. It just has a gradient, right? Or a slope is another way of saying that. The resistance is the same thing, right? It's a nice tight ascending channel where the stock goes up, the line resists against it from rising any further, and then it comes back down. And it's done that several times that you can see. Once you've just found your trend and you've drawn all your trend lines in and your market range, etc., it's then about trying to understand where the key levels are, right? And another way of saying that is trying to find your key resistance and support levels. Now, I don't want to go too hectic tonight, right? That's not really the point of tonight on technical analysis, but I'm just trying to give you a rules-based approach. So I guess forgive me in some ways, right? So there's a very key level of resistance. As you can see there, it's bounced off it a couple of times in the past. I might get my little mouse and I'll show you what I mean. It's bounced there and it's bounced there. Usually I have a couple of things. What you want to do once you've drawn your uptrends, counter trends, accelerations, your ranges, etc., you've drawn in your support, your resistance levels. The next thing is to try and identify any patterns and subsequent breakouts as well. In this particular circumstance, what we're looking at is an ascending triangle pattern, and it's a very basic, common type of technical pattern. It's a type of, it can be, or often is, basically a type of continuation pattern, right? So what happens is the stock is traveling up, right? It's creating high peaks and troughs, traveling up. Then it gets to a point where it doesn't want to go any higher, right? And it's around 78.50 in this particular case. So it's gone up, nope, no thank you, and it's done it again, right? So 78.50 seems to be a point that the stock doesn't want to get through, but at the same time, it also doesn't want to fall, right? Because you've got this uptrend line, it keeps bouncing higher. Now, eventually, because these lines aren't parallel, the stock must break one of them at some point, right? It has to, because it's a triangle. And time will march on. So what we're looking for is the break of the triangle pattern, right? So, oh, well, there you go. I do have little circles there. The breakout is what we're looking for quite often, okay? Now, I don't want to get stuck into technical analysis too much, but ultimately you want to look for an entry signal. A breakout is a very typical entry signal. Excuse me, I've got my dog. Hang on a sec. Oh no. I actually, by the way, just if you want to know a little bit about me, I'm the type of person who does not allow my dog to have squeaky toys. But my dog found one in the park today, and guess what? Yes. So anyway, just a little bit about myself. The entry signals are very important because ultimately you might be like, okay, well, this stock looks bullish, but what day or what time do I get in? Do I get in now? Do I get in like later? Do I put in a price higher or something like this? And those are very good questions that you need to answer. Okay, I'm not telling you how to answer them today because that's not really what the point of the webcast is, but it's something that you do need to consider. One of the final things that you actually want to do from a direction picking perspective is use technical indicators to confirm your thinking, essentially. And I put them at the end of the analysis deliberately because the one rookie mistake is to put them at the start of your analysis, right? Because they're cool little graphs that feel like they're cheating, right? Sometimes it's like, oh my God, these stochastics are awesome. They tell me where the stock's going because it's like mathematical and, you know, do you know what I mean? Right? People use it as a way to not do the hard work. And that's a huge trap. It's a huge trap. So I deliberately put it at the end of the rules because it should be the last thing that you look at. Okay. So in there's a whole bunch of indicators that I use. I used to use more. Now I use a little bit less. But you know, I'm always trying to learn and evolve the things that I'm doing as the market changes over time, right? But as it stands right now, one of the indicators I use is called the stochastics. Right? They're technically called the stochastic oscillators, right? I have no idea what that means, but essentially it's this little blue and red line. They're moving averages in some ways, right? Presented as a little pretty graph that resides underneath the main chart. And they're used for a few different things. One is, and what you, in my opinion, if you're an advanced trader, you should use them for divergence. If you're a beginner trader, don't worry about that. Just use them for momentum and direction. For example, you can see that they're both pointing up at the moment and they've just crossed over, indicating a change of direction and that the stock is likely to continue going up. The other thing that they're good for is showing where the overbought and oversold periods are. So when it gets to the overbought periods, it usually comes off. When it gets to the oversold periods, it usually rises. And that the stock has been fairly clear with that as well. Okay, so you can see why people, especially beginners, like to use them at the beginning of their analysis because it feels like a little bit of a cheat card in some ways, but I can promise you it's not. I can promise you it's not. I don't even, honestly, don't even have the stochastic. I don't even look at the stochastics until, like, you know, I'm sure, like, I'm confident on the trade. I'm not even kidding, right? I look at them right at the end. The other thing that you could have a look at if you wanted to was the moving averages. I really like these because I find them not intrusive enough that they affect my decision making, but they do. I think they do their job well, which is to confirm. Right? They don't. What I like about them is they don't seem to give me a lot of conflicting information, but they usually give me concurrent. Is that even a word? They give me information that seems to agree with what I'm thinking a lot of the time, or they're just irrelevant. Does that make sense? Now, again, it's probably not suitable for beginners. When you're a beginner, you maybe just want to focus on one or two. Maybe you want to look at the RSI or the Bollinger Bands. I use the Bollinger Bands. I used to use the RSI. Sometimes I look at them as well. They're good for divergence as well. But moving averages, I think, are kind of like pizza. They're the great equalizer. Like, you know, it doesn't matter if you're rich or poor, if you're an investor or a trader, if you're short or medium or long term. I think moving averages has a place on your chart, put it that way. The ones that I use are fairly common. They're the 50, 100, and 200-day moving averages. And what they do is essentially average out the closing prices for the past X days or X periods. In this particular circumstance, we're talking about the past 50 days, 100 days, and 200 days. And I've color-coded them, right? So green's the 50, blue's the 100, and red's the 200, right? Use them however you want to use them. Use them like, you know, there's investment ways to use it, like golden and death crosses as well. There's looking at them from an overbought perspective, oversold perspective. From a short-term perspective, I like them because they tend to act as support and resistances. ASX, since its lows, every time it's touched the 50-day, it's bounced. You see that? Now, it doesn't take a genius to figure out what's going to happen next time it gets to the 50-day moving average or what's likely to happen. It does not take a genius. Right? I mean, we're just looking for repetitions. And humans are really good at that, by the way. Like, evolution has allowed us to identify these patterns. And I think that's a fairly obvious one. Now, I mean, by the way, I don't know if you noticed, but the 200-day seems to be not too bad either, but they do fail sometimes. And so because they do fail sometimes, we don't lead with them. We use them at the end of our analysis, right? But I've just given you 5 kind of steps or rules, right? Now, obviously, there's more to it than that. I don't want to give you everything, you know, because that wouldn't be fair. But 2, I don't have the time for it, right? All right. So the summary: 1, look for trend and range. Rule number 1. Number 2, look for key resistance and support levels. Number 3, look for patterns and breakouts. 4, look for entry signals. 5, confirm with indicators. 6, consider fundamentals. Now, how much you consider is up to you. It depends on what your time frame is, right? But you know what could be really simple on number 6? It could be something like, hey, this is reporting in 2 days' time. You know, that's important, pertinent, fundamental information that may affect your trade, right? You might be doing like a counter trend trade where it's like, you know, like Kogan or something, or APX, where it's like the stock's just been hammered and you're like, oh, look, this thing's got to be bottoming out soon. I'm going to buy this stock. I'm going to trade it to the upside because there's just so much upside potential. That's not bad analysis, but you need to match that with fundamentals, because if that's still of a dog of a stock, you're trying to pick a bottom. And you know what they say about picking bottoms, right? You get smelly fingers. Number 7 is to plan your trade. Now, I've highlighted in the red because it's a bit catch-all. All right, so that really covers the next 2 parts. It's about planning your trade in a sense of choosing the strategy, as well as your risk management. And I put that under that umbrella because ultimately you should be knowing what strategy you're getting into, obviously, but also what your risk is, where you're going to exit, where you're going to take profits, where you're going to cut your losses, if you're going to roll, how you're going to roll or something like that if something goes wrong. What I'm saying is you just got to try and be aware of the different scenarios that could occur before you even enter the trade. Does that make sense? So that's number 7. Now, if you come along and do our education, our beginner's education, we'll give you a set of trading rules for picking direction, for strategy, for risk management that are much more congruent than this, right? If you come along and do our options education, we'll also give you a set of trading rules. And that's what I'm about to go through in a moment, or in a very basic way. So when it comes to strategy, there's a few different approaches that I would say are fairly accessible when it comes to our market. If you're trading foreign exchange, I'm not talking to you really. If you're trading CFDs, I'm not talking to you, because I actually don't know why you'd bother trading CFDs when you have access to options and mini warrants, but that's another conversation for another time. You know, if you're trading stuff outside the ASX, you listen to what I have to say, but ultimately this strategy stuff it doesn't affect you at all, and it's not suitable for you. So when I talk about strategy, I'm talking about different ways that you can implement your positions, right? So for example, a stock, and I mentioned this earlier, you can buy low, sell high. I know that sounds like an obvious strategy because it is, but it is a strategy technically, right? I'm going to buy the stock when it's down here. I'm going to sell it when it's up here, because if I can buy it down here and sell it up here, I'll make money, right? It's like saying I'm going to breathe oxygen in order to survive. It's like, obviously, good on you, Caro. Well done. I get the obviousness of it, but it's technically a strategy, right? Averaging down is perhaps a bit more of a sophisticated version of that, but it's again a strategy, right? There's other strategies that we implement as traders, and the reason we do is because they ultimately provide flexibility. And I'll run through that. I'll run through that now, actually. So we like to trade options. And if you don't know what options are, again, there's other webcasts that we run that talk about options in far greater detail. Options are the most complicated instrument that you can regularly trade on our market as a retail trader. And the reason why they're the most complicated is because they're the most flexible, right? With flexibility comes complexity. You can't have something that's super complex that allows you to trade multiple directions, profit from multiple directions, have varying degrees of leverage, and also be simple. It's not possible, obviously. So they are complicated and they take time to learn. I mean, I spend a great deal of my time trying to educate people on options. Sometimes I go a little bit overboard, like I can go a little bit too deep down the rabbit hole. It's a big passion of mine. I've always been deeply interested in how they work, and more importantly, communicating that to other people. I'm actually thinking about doing a regular webcast, like trading after dark or something like that. And I'll get a camera, I'll keep my long hair, I'll put a turtleneck on, I'll have my glass of wine, and my little Jack Russell sitting on my lap, and we'll go through the intricacies of options trading. It sounds like a very niche market. Maybe I'll have one person on, but it's super interesting stuff. I find anyway, right? The reason why they're so complicated though is because, again, they're so flexible. So you can trade them in so many different ways. You can use options as a trader, really short-term styles of trading. You can trade very directional, right? Bullish, bearish, right? Rising or falling markets. But you can also trade sideways markets. You can also trade bullish and sideways markets. You can trade, hey, you know, one thing that's really cool that we've been using recently is bullish and bearish. So for example, right now we're going through a reporting season, and we do so twice a year, right? Right, so we usually have a reporting season at the start of the year, and we usually have one around about now at the end of the year. And companies update the market on how they've gone with their revenues and profits, and their operations, and they tell the market, hey, this is what we think is going to happen over the next 12 months, right? Investors, fundies, pundits, punters, everyone jumps on and goes, oh Lord, and then they buy and sell those stocks fairly aggressively, and that leads to excessive price movements, right? Well, you can do a trade where you make money if the stock goes up or down. You make money if the stock goes up or down. I'll say it again. You make money if the stock goes up or down. The problem is that the drawback is that you need a lot of movement. So it can't be like 1%. It needs to be like minimum 5, right? Ideally like 7 to 10. But I would say 7% movement is fairly common if you do your research on optionable stocks in Australia. Just something to think about. I mean, we don't really put them out as recommendations because it can drive markets. It can drive, and if you don't know what I'm talking about, don't worry. But we have our most successful traders do them. Yeah. Now, when I talk about flexibility, I'm just comparing it to stock, right? Because you need something to compare to. So I'll put that little caveat there. We can do strategies that trade a whole bunch of different directions, but we also can do different types of leverage. And I think that's really important as a trader, because ultimately it means that you can use less money in order to make more money. You can obviously lose more money as well, which means you need to be careful and understand what you're doing. But using less capital, for me, is just super awesome, because you just need less money. I mean, I shouldn't, that's fairly self-explanatory, isn't it? Now, I just want to run through one example of what I'm talking about, and it's not going to, I don't think it's going, I kind of hesitated putting this in the presentation tonight because I wasn't sure if this was going to resonate with a lot of people, if you didn't understand options at all, but hopefully I'm able to kind of drive home the point. Again, tonight's presentation is about really understanding the importance of having a system, or having a set of guidelines or rules in order to approach the market, so that you're not just buying on what Dave from the local RSL told you to buy, and you're not just reading hot copper articles to inform your decision-making process. Okay, and if that's you, that's okay, because that was me as well, and that's a lot of other people, all right? So that's not meant to be a criticism. This is just about getting you better, okay? When I go through this strategy section, I'm assuming, again, a lot of knowledge, like I did with the technical analysis section. Okay, and when we teach option strategies to our clients, we give them a cookbook. It's like a book. I mean, it literally is a book in some ways. You can download it, or we give it to you physically as well. And it essentially says, okay, if the stock's doing this, consider this strategy. If the stock's doing that, consider that strategy. If the stock's doing this or that, then consider these or that strategy. Do you see what I'm saying? So we'll give you a set of guidelines that tells you exactly when to use what strategies and when. Does that make sense? Right? I know I jumbled up my words there a little bit, but I'm trying to ultimately say that you need to have guidelines that tell you when to implement your strategies. They're just as important as having guidelines to tell you which way a stock is going. Now, one example of that is there's a strategy called a bull put spread, right? A bull put spread. It's a bullish strategy that uses puts. Right? Traders aren't very creative. We're not a creative people, unless we're doing a lot of drugs, right? So we call things bull puts and bull calls because They're bullish strategies that use puts or calls. And then someone goes into a bathroom, they come out and they start calling things iron condors and butterflies and stuff like that, right? It's not me, but it's apparently our people that do that. So tonight I'm going through a bull put spread, okay? And there's a million different ways that you can set up a bull put, okay? And the reason is because there's just so much flexibility with options. There's a lot of different strikes, a lot of different expiries that you can choose. And it's always going to come down to context, but you can give a guideline. And that's, again, what I'm trying to say of the important is. So when we teach bull puts, one of the things that we say to clients is, look, the good thing about a bull put is that if you're right, not only do you make your maximum profit, or could you make your maximum profit, but you also avoid exit fees. And so you implement this strategy when you think that you're going to hold this trade for a while. And so if that's the case, then we like to implement this strategy when we think the stock is going to go sideways as well as up, all right? It could go up a lot, but that's not really our concern. What we think is ultimately going to happen is it's going to track sideways. Now, I put a chart of NCM up. Now, I'm not stuck. I'm not saying go do this strategy on Newcrest, because there's a lot of things that, for example, Newcrest is reporting soon. Oh, no, it reported today. Sorry, thinking of another company. Newcrest reported today. And when a stock reports, it actually moves fundamentally, not technically. So all that technical analysis is kind of blown out of the water on Newcrest because it doesn't care about your technical analysis. It's going to move fundamentally on the back of its report, right? So that's one reason why you actually wouldn't do this. But I thought, I'll put the chart up. I need to find something that's an example where I could do this strategy, right? Because, and so I'm going to choose this. Now, when we teach the bull put spread, what we like to do is we like to place the sold and bought leg underneath a key level of support. And you can see that I've drawn that in there, right? The key level of support here is roughly around $25. Now, and I say roughly, you can't be too precise. If you're an engineer or an accountant, all right, this is, you're going to have to use a thicker texter than what you might be used to. So you got a support here, right? You can see it support throughout there, maybe even there. You can see it was a bit of resistance there as well, maybe even a bit of support through here. Right, and if you go back historically, probably more so as well. Now, again, I'm not trying to sit here and convince you that this is technically the right stock to do it on, but I'm just trying to give you a bit of a rough example, okay? The stochastics are pointing up. There's, room to the next resistance level. I think it's going to try and dip above the moving averages, but that's a conversation for another time. Excuse me, hang on a sec. Right, but obviously, let's pretend there isn't a dividend and it hasn't reported today. So again, with the bull put, we like to place all our risk underneath the key level of support at $25, or roughly speaking, $25. And what that ultimately means is that, what that means is that we might sell at $24.50 and buy at $23.50. The expiry is the 2nd of September. Now, with options, you have an expiry date on the trade. And look, I'm not expecting you to understand this stuff. I mean, it's really not important. I just need you to understand the concept at this stage, okay? If you're not following me along and you're having a bit of a brain fart, that's totally fine. I actually expect that. That's okay. The point that I'm trying to make here is that there's a million different ways I could set up this strategy, but I have a set of rules that tell me where to place my strike and what expiry to choose, okay? Now, with this particular strategy, in this particular circumstance, the risk is $7,300, right? And you could do less than that. You could do more than that, all right? I had to pick a number, right? I mean, what am I going to do? $1? Okay, obviously not. Now, so the risk is 7,300 and the profit is 2,700, right? And that doesn't seem like a good return, does it? Or maybe it does. I don't know. That's completely subjective. I think it's pretty good, but some people would tell me that it's not. Whatever, Trevor, right? But let's look at how you make it. So as I said to you, when I do the bull put, I like to place all my risk underneath a support level. So as long as the share price remains above the sold leg, I make my maximum profit by the 2nd of September. The payoff matrix down here explains that in much better and greater detail kind of way. So you can see that there's an axis here. The y-axis is price. So that's the current share price of Newcrest, 25.54. That's 1% higher, 2% higher, 3% higher, 4% higher, 5% higher. And that's 1% lower, 2% lower, 3% lower, etc. Yeah? You have today's date here, tomorrow, the day after tomorrow, the day after tomorrow, etc. Right? Basically the next 7 days until the expiry date, which is the 2nd of September. Now, you can see as long as the share price stays above 24.50, you make your maximum profit, which I said was 2,700, didn't I? So let's have a look. 24.50, you're losing money, you're losing money, you're losing money, you're losing money, and you make your maximum profit by expiry day, right? So the share price can go from 25.54, where it is now, it can actually drop about 4%, and you're still going to make your maximum profit in a week's time. The share price can go nowhere, and you make your maximum profit. The share price can go up, and you could even like potentially close early. By the 23rd, if it goes up 5%, then you could take your $2,000 profit and run. So this is, I hope you've clued into by now, and I did mean to say it earlier, this is purely profit and purely loss. The point of it is to be able to tell you what the profit is at particular share prices at different periods in time. Does that make sense? Hopefully you can read that. So one thing that we always do when we, before we even enter a trade, right? You know, no matter what we're doing, we always put it into the calculator. We go, all right, look, we're going to do a bull put on Newcrest, and we're going to suggest a recommendation to our clients, right? Before I suggest this to my clients, I'm going to go and put it into the calculator, and I'm going to check this matrix, right? I'm going to take screenshots like I did of it today. I'm going to send it to the client. I expect the client to look at it before making a decision to enter. And then, you know, yeah, that's what they do. Hopefully they look at it and then they can tell me if they like it or not. So you want to be able to, and that brings me to really the next point, right? Now, again, before I jump into the next point, if you didn't really understand what the hell went on there, just understand that ultimately, provided the share price stays above 24.50, you make your maximum profit by the 2nd of September. If it goes up, you can close early, but it's not necessary in order for you to make your maximum profit. It can actually even fall 4 or 5% before you start losing money. All right. Now, that's not me trying to teach you options. That's not me trying to teach you a strategy. That's just me going, well, there's a million different ways to set up the strategy that I just showed you. We set it up in a particular way so it achieves this desired result. And the reason why we set it up that way is because we have rules and guidelines, right? Just to kind of bring it back to that point. Now, the next step and the final step ultimately is about trading rules. It looks like I'm making good time. So I'm basically going to finish up around here, okay? Risk management is obviously important because unless you're from the future and you can, then you wouldn't even be attending this webcast. You're going to make mistakes and you're going to, and by the way, you might not even make a mistake, right? You're just going to get a trade wrong. You know, what's funny is that one thing that someone has said to me, or I've heard before on a few different accounts, there's a difference between a winning trade and a good trade, and there's a difference between a losing trade and a bad trade, right? Because you can do a good trade and it still loses. I mean, I've had plenty of those. And sometimes you can do a bad trade that also loses, and I've had those as well, right? You can also have bad trades that are profitable or that are winners. And yeah, you get my point? So ultimately, when it comes down to risk management, you're trying to mitigate damage. Yeah. You're trying to reduce your losses. You're trying to preserve your capital. Yeah. You're going to try and apply your technical analysis in order to try and identify exit signals. and you're going to have a rules system based around that. Does that make sense? This is very important. I mean, this is the final piece of the puzzle, and the picture isn't complete without it. It's a bit of alliteration for you. Now, if you're interested in any of the services we provide, then please do get in contact. We provide trade ideas and recommendations to our clients. We can execute orders for you. So you could call me up whilst you're on the road. We have a lot of people who are full-time professionals. They're small business owners. They're people who work with their hands, like out in the field doing stuff. They can't always get in front of a computer, but that doesn't mean they can't trade. It just means they have to pick up the phone, give me a call, and I can do the orders for them. And not just me, obviously other people in the business. We can give you advice when it comes to picking direction. We can give you strategy ideas. So you might call me up and go, hey, I think the banks are looking pretty good today. I think they're going to go up or whatever, right? And I can give you a strategy. I can say, oh, okay, hey, how about you do this? This is where you'll make money. This is where you'll lose money. This is what happens over time, all this type of stuff, right? And you can make a decision. We'll help you manage your risk and we'll help you manage your portfolios. Those are the services we provide. And what separates us from other businesses is that we really focus on you as an individual. Our business is about retention, not acquisition. When we run education courses, we keep our groups to small numbers, like 10. And we run them like once every couple of months, yeah? That's really important to us, right? We know that retaining you as a client, we know that if we can help you make money, you're likely to continue to use our services, and that keeps our doors open. I mean, our education is not even a profit center for us. We don't really make money from it, right? Our education is simply a stepping stone to helping you become a more successful trader so that we can retain you as a client and that you continue to use our services and you continue to develop long-term relationships with us. And that's what really separates our business. We don't get individual broker commission either, which I think is a conflict of interest, but that's, again, another conversation for another time. That might be for, Trading After Dark, one of those webcasts. And we do run education as well. Now, I'm not going to go through that. I'll go through that next webcast, right? I'll talk a little bit about our education. If you're interested in the basic course that we run, you're welcome to talk to our market advocate, Jared. Jared will be able to have a chat to you, understand where you're at, what type of experience you have, what your goals are, and he'll be able to point you in the right direction. We've, denied people from doing our courses before because we don't think it's suitable for them. We don't want to waste, this is going to sound terrible, but we don't want to waste our time on you if we don't think you're going to turn out to be a profitable client. Yeah. One thing that I will brag about, though, is that if you do any education with us, what's really cool is that you get your own personal trainer. You get your own mentor, and you work with them one-on-one to develop your skills. And I think that's really, really, really important. That's how I learned, so I guess I'm biased. All right, thank you so much for joining us tonight, or myself. It's 8:04. I've gone 4 minutes over time, but I reckon I started like a couple of minutes late, so I think I've done pretty well in terms of time management. I do appreciate you guys taking an hour out of your time to come listen to what I have to say. This session is recorded, so it will be sent to you if you do want to listen to it again. You want to listen to me rave about certain particular things. If you didn't really feel comfortable asking your question tonight, or if you wake up in the middle of the night going, oh my God, I forgot to ask this, you're welcome to give me a call directly and ask it to me, and I'm happy to answer it, obviously. You can email me and I'll get back to you, I promise. The next webcast, the second part, is on the 26th of August, right, which is next week, obviously. And it's going to be at 1 p.m. Australian Eastern Standard Time. When do we go into daylight savings? September, 3rd of September or something? So yeah, 1 p.m. Melbourne, Sydney time. I respect it definitely during the day. If you're unable to make it, that's okay. We will send you a recording as well. What I'll get you to do, though, is type any stocks that you want us to look at. So all the stuff that I've run through tonight, what I'm going to do, or what myself and Tim, the head trainer, my kind of boss, what we're going to do is we're going to actually apply a lot of our rules-based system that I touched on a little bit tonight in the live market. So everything that I did tonight, plus obviously much more drilled down practical approach, we're actually going to apply in the live market. So send us a bunch of stocks that you want opinions on, and we're happy to do it. Preferably Australian, right? Because don't give us some stock in some the Israeli stock market or something that we don't know anything about, right? Please pick local, make our job easier, right? And yeah, there's our website, tradercircle.com.au, and the number to get us on, 03 for Melbourne. All right, I might finish up there, guys. Thank you so much. I really appreciate your time jumping on. If you've got any other questions, you're welcome to type them in now. We can look at the WPL and BHP merger. I'm going to be honest with you. I am still confused by it. I'm not confused. I shouldn't say that. I don't know what the repercussions are. Sometimes, obviously, that's a tough one, that one. What is often easy to see how it's going to affect the share price, that one's less obvious. I know there's a lot of people frustrated by that stuff, though, as well, that whole WPL, BHP. I know there's a lot of people who are frustrated with the BHP delisting in the UK as well. But I'll probably get Tim to talk about that in the next webcast. All right, Dave, thanks for the question. Daniel Bush, hopefully you've been able to see the screen. That's pretty important stuff. Alex, Alex, talk to Ben about the indicators. Indicators are things like Bollinger Bands, stochastics, moving averages, RSI, MACD. I mean, we don't teach you those last few, but yeah, there's stuff that you're already using, Alex. Maybe have a chat to Ben to clarify. Jean-Pierre, this is not a webcast for doing that. All right, you and I can talk tomorrow about that. You're a hungry little hippo when it comes to object education, and I love it. And I'll just continue to work with you one-on-one on that with that stuff. It's not, comparing it with bull calls, we'll be here till 9 o'clock. You're welcome, Jamie. I took a lot of that out. That's good, and you're welcome, Ray. All right, guys, thank you so much. I really appreciate your time. And I love all the feedback and all the questions. I'll see you on next time.